Hello and welcome. We find ourselves in very strange times. The aim of today's short video is to guide you through the Chancellor's Winter Economy Statement, taking you through all of the major points. But as always, if you've got any particular queries, do contact any of us partners here at McGills. We're very happy to help. We've tried throughout the Corona crisis to offer as much guidance as we can to both clients and non-clients. It hasn't always been easy because there isn't always that much information available. And as you'll see when we talk about the job support scheme, there are still some loose ends that we'd like to tie up. But essentially today we'll be covering the job support scheme, the further rounds of the self-employment income support scheme, pay-as-you-grow for bounce-back loans, some extended deadlines for loan schemes, a little bit on tax deferrals, and something on the extended reduced rate for tourism and hospitality. Okay, so perhaps the main item that grabs most of our clients' attention is what you might call son of furlough or job support scheme. The idea here is that all of the parties in any particular role, shall we say, share the pain. So as we'll see in a moment, there is a cost for the employee, there is a cost for the employer, and there is a cost for the government. The idea is that it will top up the wages of all employees who are on short time working. The government want as many people as possible to be back working. I think the thinking is that if they're working, albeit part-time, the chances of them retaining a job and staying within that company are much greater. It's open to all SMEs, and it's also open to larger businesses who can prove that they've been adversely affected by the crisis. If it's an SME, you don't have to prove that you've been affected by it. It comes into play from the 1st of November and will be in for 6 months, i.e. ending at the end of April 2021. Who knows whether by that point we will have reached the end of the crisis. So how does it work? Employees must work for at least 33% of their normal hours, but they can work more, up to 80%. The employer will pay the wages plus national insurance and pension contributions for those hours worked in full. The government will then provide a grant for 1/3 of the hours not worked, capped at £697.92 per month. So if you sort of work that out, that means that a total of nearly £2,100 would be available to fall within this scheme, i.e. the 1/3 for the employer, the 1/3 for the government, and the 1/3 of the employee. The employer must also pay the employee for 1/3 of their usual hours not worked. So let's say they are a 36-hour-a-week contract, work 25 hours, 9 hours unpaid or not worked. So of those 9 hours, the government will pay for 3, the employer will pay for 3, and the employee foregoes their wages in respect of those 1/3 of the hours not worked. It can't be topped up. You can't use this for employees on notice of redundancy or who are actually in the process of being made redundant. And as I mentioned a moment ago, you cannot top the pay up. The idea is that we're all in this together, employees, employers, and HMG. So in effect, if you are, and you'll see that on a chart we've got at the moment, an employee on short-term working will receive at least 77% of their normal wages. In effect, the fewer hours an employee works, the more expensive each hour is to the employer, but the lower overall costs. This scheme still works with both the job scheme and the retention bonus, so you can still have them on the retention bonus as long as they're getting paid enough, as we see in a moment, to trigger that bonus. So how do those costs break down? If we take the 50% column as illustration, so 40-hour a week, 20 hours they work, 20 hours they don't. The employer will have to pay the 20 hours that they work, plus the associated national insurance and auto-enrolment or other pension costs. Of the remaining 50%, the government will meet 16.67, i.e. 1/3, 17%. The employer will meet a further 17%, and the employee meets the remaining 17%. So if you look, second line down, employees' earnings as a percentage of normal, 83%. And you don't have to work in these percentages, you can work on any percentage of any percentage of the employee's hours. Next slide. Just a reminder on the job retention bonus. There's been a lot of comment out there as to whether this will really encourage firms to keep somebody on. Is £1,000 enough to keep them on? Only time will tell. Historians will look back in 50 years' time and try and work out and debate whether this worked. So, if you keep an employee on beyond the end of January, the government will pay £1,000 per employee, as long as across November, December and January, they receive an average of at least £520 per month across that 3-month period, i.e. that's £1,560 paid on average. We haven't yet seen how the claims are to be made. We understand that for those clients that we do the payroll and we've done the furlough scheme, we will be able to make those claims for you. But beyond that, we just don't know at the moment. Rishi Sunak hasn't forgotten the self-employed. There are 2 further rounds of the self-employment income support scheme. And this effectively brings it to more than a year. So there will be November to January and February to April. Now, again, the government are not being quite as generous. They want to encourage the self-employed to get back working as much as they can. The scheme from November, December and January will pay 20% of the average monthly profits. So in effect, 20% would be for 2 months, and that's designed to cover 3 months in time, capped at £1,875. You do need to be able to sign a declaration, though, that says you have been adversely affected by coronavirus. It's not a freebie. You can have it if you're affected. If you're not affected, you shouldn't make that claim. As yet, we don't know when these applications will go live, when they'll be paid. Watch this space. If you've not signed up for our newswires, then do sign up, because we'll be putting it in there. So who is eligible? So you're eligible if, as I mentioned a moment ago, you're carrying on a trade that has been adversely affected by the coronavirus. You have to have traded in the tax year 2018-19 and submitted a self-assessment tax return on or before the revised date of the 23rd of April 2020. Just to remind you, tax returns should have been submitted by the 31st of January that year. 2020, and the government gave an extra few weeks for people who hadn't filed to get their files in, their accounts in. You must have traded in 2019-20. You must intend to continue to trade beyond that into the following tax year, 2021. Have trading profits of less than 50,000, and more than half of your total income must come from self-employment. This can be with reference to either 2018-19 or the average of the preceding 3 years. I had a couple of cases where people have narrowly missed out. It is arbitrary, and as Rishi Sunak said, you can't possibly help everyone. So as the virus has continued to flow around the country, the government have been forced to extend deadlines and extend help, which I guess was only natural. They don't want to provide help beyond this period. So with regards to the bounce back loans, they've done several things. First of all, they've extended the deadline for applying, which was to the 30th of September 2020 and is now to 30th of November 2020. They've extended the initial 6-year repayment plan to 10 years. You'll remember that it was 1 year complete holiday and then a 5-year repayment. It's now over 10 years. You've also got, which has the effect of almost halving the monthly repayments, and they have given up to 3 6-month holiday periods, 3 6-month periods where you can take a payment holiday. So if you can see that there's going to be a time when you're going to struggle to pay, you can take advantage of that. In addition to the bounce back loans, which is for the smaller firm, the CBILS loan, the Coronavirus Business Interruption Loan Scheme, has been extended to 10 years, and the deadline to apply has been extended to the 30th of November 2020. And they've promised a new loan programme, which will be revealed in time for it to start in action at the end of start of January 2021. But beyond that, we don't know anything as to how that's going to be, what the interest rate will be, what the repayment period will be. This is a useful thing that I thought was an excellent plan. So you will recall that if you were due to pay VAT between March and June 2020, there was an automatic deferral, with that tax, that VAT, being due by 31st of March 2021. However, this VAT has now been extended for the repayment period in 11 equal instalments over the 21-22 financial year. You'll need to opt into that. It's not automatic, but it will also apply to those who deferred their self-assessment payments on account that were due in July 2020 and would have been due to be repaid on the 31st of January 2021. Again, you can set up a 12-month repayment on that, but you do need to speak to the HMRC time to pay facility. It effectively gives you all the way through until January 2022 to catch up that payment that would have been due in July 2020. So some parts of that payment have effectively had 18 months interest-free borrowing on them. The extended VAT cut, so if you'll recall, VAT for both tourism and hospitality was reduced from the normal 20% to 5%. That's been further extended so that it finishes at the end of January 2021, which I guess is a signal that the hospitality sector will continue to bear the brunt of this. We shall see as the winter progresses, how many of these facilities will be able to stay open. There's also some further help for the businesses in that those hospitality, retail and leisure will not have to pay business rates for the whole of the 2020-21 year. So this is the year that ends 31st of March 2021. And there are some more monies in the local authority discretionary grants fund, as long as you haven't claimed under another scheme. Local lockdowns seem very much to be the flavour of things. As we sit here now on the 12th of October in the Cotswolds, we seem a long way away from the heights of the epidemic in places like Liverpool and Nottingham. But those businesses that are required to shut down because of local lockdowns will be able to claim up to £1,500 on a 3-weekly basis, but only those at local lockdown, not things such as nightclubs, that type of thing. And in addition, the Future Fund will offer convertible loans to innovative companies who are facing financial difficulties. This will be things like new incorporations that are involved in research, all sorts of things like that. There have been a number of new businesses that have been particularly caught out by just setting off down the journey, and then finding out that all their prospective funding has been removed. One of the government's fears has been that those who will be hardest hit by the coronavirus will be those leaving full-time education to start work. And there are 2 schemes designed to encourage us employers to take on new youngsters or new apprentices. And in fact, this year we've taken on ourselves apprentices in both our Cirencester and Malmesbury office. And whilst the apprenticeship bonus was not the deciding factor, it certainly helped and encouraged us to look at, do we take 1 or 2 on? And the second apprentice that we took on, we may not have done so without the bonus. And we're happy to do what we can to help those looking to start in the world of work. And I think those who were finishing their exams, A-levels in July this year, the attraction of going into work rather than the lottery that is university at the moment in terms of will you have your lessons, what sort of university experience will you have, how much will be online, how much will be face-to-face. I'm sure that has tipped a number of students, youngsters, to turn to the world of work, whereas they may well have gone to university without the COVID crisis. So I hope that that's been a useful guide. It's been a little bit of a whistle-stop tour through all of Richie Sunak's measures. Do keep an eye on our website. We try and put as much information as we can on there as to the detail, as to when things start, when things stop. Inevitably, we can't cover every situation in our newswires and on our website. So do please give us a call either in the Cirencester office or in our Malmesbury office, 01666 823 201, or email meetings@mcgills.co.uk or any of the partners here.